The US dollar edged higher in global markets as traders grew cautious ahead of a critical jobs report and an imminent Supreme Court decision on the legality of Trump-era tariffs imposed without congressional authorization. Market participants have been positioning ahead of the U.S. non-farm payrolls data for December, which is expected to shed further light on economic trends following the recent federal government shutdown. Analysts say that while the payrolls figures themselves will be important, it is the unemployment rate and wage growth that may move markets and influence Federal Reserve expectations about future monetary policy. The dollar index, which measures the greenback against a basket of major currencies, climbed to a fresh monthly high as investors sought shelter in the world's primary reserve currency. The dollar's rise reflects a broader sense of caution as the Supreme Court prepares to rule on whether President Trump can continue to use the International Emergency Economic Powers Act to impose tariffs. Should the court strike down the emergency tariff powers, the ruling could have far-reaching consequences for global trade policy and government revenue streams in the United States. Treasury markets have also felt the influence of geopolitical and economic uncertainty, with yields edging higher as investors reassess risk and safe haven flows into U.S. assets. The potential for tariff refunds totaling up to $150 billion has been widely discussed among trade attorneys and corporate leaders ahead of the court's decision. Many multinational businesses have already begun strategizing around the possibility of receiving refunds for duties paid under the contested tariff regime dating back to 2025. The U.S. fiscal outlook could be impacted significantly if tariff revenues that once contributed to government coffers must be returned to importers over time. Investors are also watching currency markets beyond the U.S. dollar, as disruptions in trade policy tend to ripple across global exchange rates, influencing emerging and developed economies alike. For example, the Malaysian ringgit and other Asian currencies have shown mixed reactions, with the ringgit strengthening against some peers but weakening against others amid the dollar's movements. Currency strategists note that safe haven demand for the dollar often increases as uncertainty around economic policy grows, and this dynamic has been visible in recent trading sessions. Analysts at major financial institutions believe that an adverse Supreme Court ruling on tariffs could marginally support the dollar while also easing global trade tensions. A more positive global risk sentiment arising from tariff clarity could in turn benefit higher-yielding currencies such as the Australian and New Zealand dollars. Despite these potential benefits, markets remain cautious as volatility often spikes around major legal decisions that affect trade and economic policies. The lingering question for many economists is whether the Federal Reserve will remain on hold with interest rates given the evolving data and policy backdrop. Some market models currently reflect a high probability that the Fed will keep rates unchanged in the upcoming meeting, emphasizing economic growth and employment metrics. In addition to the U.S. jobs report, investors are closely monitoring inflation data from key global economies that could shift expectations for future monetary action. The Japanese yen has experienced weakness against the dollar as the greenback gained traction on risk-off sentiment in foreign exchange markets. The influence of China's mixed inflation and economic data has also supported expectations for additional stimulus measures in that economy, which can shift global capital flows. Meanwhile, cryptocurrency markets have reflected broader risk sentiment, with Bitcoin and Ether showing slight declines as the dollar's appeal has risen. The interconnection of traditional and digital asset markets underscores the pervasive influence of macroeconomic policy and legal developments on investment behavior. Should the Supreme Court rule in favor of the administration, markets may view the continuation of tariff powers as a reinforcement of presidential authority in trade matters. Treasury Secretary Scott Bessent has publicly championed the tariff strategy as beneficial for domestic investment and job creation, even as legal challenges persist. Bessent's commentary reflects a broader push within parts of the U.S. government to maintain assertive trade measures that support economic security goals. Opponents argue that tariffs imposed under the Emergency Powers Law lack clear congressional authorization and exceed the limits of executive authority. Legal experts cite concerns that a high court ruling against the emergency tariff powers could reduce presidential flexibility in future trade negotiations. Some economists suggest that tariff uncertainty has already influenced corporate investment decisions, with firms delaying capital allocation pending legal outcomes. Should the tariffs be struck down, sectors reliant on imported materials could see cost pressures ease and result in improved profit margins. Conversely, domestic industries previously protected by higher duties may face heightened competition if tariffs are removed or diminished. The broader debate surrounding tariffs also touches on long-standing issues of trade deficits and the structural imbalances in global commerce. Policymakers have long grappled with the challenge of balancing trade protection with the benefits of open markets and global supply chains. In the financial press, discussions often underscore the potential for tariff litigation to become a defining economic theme of the year. Market sentiment could shift quickly once the Supreme Court delivers its ruling, given the high stakes for both investors and policymakers. Some traders are already positioning ahead of the verdict, adjusting exposures in equities, bonds, and currencies to manage risk. The interplay between jobs data, legal decisions, and monetary policy forms a complex backdrop that shapes investor expectations in the early part of 2026. Long-term investors may view any short-term volatility as an opportunity to recalibrate portfolios based on broader economic fundamentals. Despite uncertainties, economic growth indicators in the United States remain resilient, supporting continued interest in the dollar among global holders. Other factors such as geopolitical tensions and regional conflicts also contribute to demand for haven assets like U.S. Treasuries and the dollar. Market liquidity conditions, which have tightened at times, also play a role in how currency traders respond to major news events. A clearer picture of economic strength may emerge once the December payrolls data is released and digested by global markets. Analysts caution that even robust jobs figures might not substantially alter near-term interest rate expectations if tariff and legal risks remain unresolved. In forex markets, technical indicators also suggest that the dollar may continue to hold gains if global risk sentiment stays subdued. The euro-dollar exchange rate remains a focus for currency strategists, as movements in that pair often signal broader shifts in market dynamics. Investors in commodity markets have also been watching the dollar's strength, given the inverse relationship between the currency and raw material prices. Gold prices have edged higher in some regions, reflecting inflation and rate uncertainty, even as the firm dollar puts downward pressure on some commodities. Overall, financial markets stand poised for a period of heightened focus on U.S. economic releases and pivotal judicial decisions that could shape trade policy for years. While traders await further signals, the interplay of data, legal rulings, and international reaction continues to ripple through markets worldwide. The unfolding events underscore the intricate link between policy, economics, and investor psychology in global finance. In conclusion, the U.S. dollar's modest gains reflect a multifaceted market landscape filled with significant legal and economic catalysts that will likely dominate headlines in the